This is the Equity Management Academy weekly podcast for mean reversion trading for February the 3rd, 2022. In today's financial markets, fear is the common motivator. Summary. The headlines today are related to inflation. Eurozone inflation hit new record highs of 5.1%, putting pressure on central banks to raise rates. The markets are being affected. It is forcing many investors to liquidate their position as a result of margin calls. The markets today are providing some incredible bargains. Fundamentals. Meta, old Facebook, is down about 25%. Amazon is down 6.4%. Facebook is down 25%. We have a massive liquidation, particularly in tech stocks. The tech stock decline is affecting everything across the board, including gold and silver. Gold is down $18 and silver is down 63 cents. These are fast markets to the downside for many assets. The markets today are providing some incredible bargains. We continue to add on the lows to our core long positions in gold, silver, and Bitcoin. The headlines today are related to inflation. Eurozone inflation hit new record highs of 5.1%, putting pressure on central banks to raise rates. The cost of living in Europe is rising fast. A sharp drop to 4.4% was expected. The euro jumped to new highs against the dollar. This will create some hawkish talk from the European Central Bank about inflation. The markets are being affected. It is forcing many investors to liquidate their position as a result of margin calls. In NASDAQ and other markets, this is an incredible fire sale. If you want to get back into tech stocks, this is where you go in and you add to your position. In relation to inflation and hawkish talk, it is all short term. It feels like the peak of the inflationary fears that we currently have. You have to factor in that world debt is at 130% plus of global GDP. Raising rates will only make things worse. On the other hand, they raise rates because of inflation, but on the other hand, governments have to borrow money to pay for their debt at new, higher rates. One is inflationary, the other one is deflationary. If interest rates rise fast, they will cause massive distortion in the yield curve and widespread defaults around the world. It is really a difficult place to be. If you're a central banker, Patrick MontesDeOca, CEO of the Equity Management Academy, said, all they can do is talk and create fear in the markets, which is what they're doing. Do not let this fear prevent you from seeing reality. If interest rates go up sharply, you can see what happens. Even just hawkish talk about raising rates causes major drops in assets. Look at such pullbacks as opportunities to buy. If they do raise rates, they will have to lower rates immediately or create more stimulus, which is chipping away at the purchasing power of the US dollar, euro, or any other currency. Silver. We use the variable changing price momentum indicator, VCPMI, to technically analyze the markets. Silver made a low of 2202. We are at a major blue level according to the VCPMI. For the daily signals, the market is below the buy 2 level, which means it is extremely oversold. The weekly and daily numbers down to 2164 are in a blue area, major support, where inventory should start to come into the market. We should begin to see support and demand. We are oversold in a major area of support, Equity Management Academy CEO Patrick MontesDeOca said. If you're a day trader, you should not have a position right now. You are looking for the price to cross any of the VCPMI pivot points. down to the weekly signal of 2164 or coming back up above 2226. The algorithm in the VCPMI sees that the lower the market goes, the higher the probability the buyers will start to come back into the market. Gold. Gold is similar to silver today. We are in an alert mode either to come down to 1787, which is the daily number, or it may revert back above 1810, which is the weekly and daily average. By doing so, it activated a bearish price momentum and met the target. Right now, it is in a neutral zone. Already, gold is starting to see some demand come into the market. We recommend continuing to hedge with dust if you have dust. We recommend taking profits at about 2045. The market appears to be fitting the cyclical pattern. We are looking for a rally after a correction down to 1780 or 1800. We are continuing to add to our core long position on these new lows. Gold has hit a buy trigger at 1800. We are buying gold. We are beginning to see the kind of reversion that the VCPMI is predicting, regardless of the news. Cover your shorts and start to look to buy triggers. If you are day trading, the initial targets are 1805, where you can begin to unload some of the profits. The weekly target is 1810. Bitcoin. We are below the weekly average of 36,510. We are in a choppy area. The average price is a 50-50 standard deviation, and we are at the weekly average price and below the daily average price. We got up to 38,765 yesterday. Then we reverted, activating a bearish price momentum. It is now trading around the weekly average. We are now waiting for the market to come down to the daily buy one level and activate a bullish price momentum of 36,516 with a target of 40,163.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ema2trade.com, or listen to any of our previous episodes.
Good morning, everybody. We're back here live in the live trading room here, and we have another sharp update here in Bitcoin. 43,470, up another 7%. And we have completed the targets that were mentioned on the report. I wanted to share that report with you, which was published on the Associated Press on the 4th, because it captured the essence of the signals produced by the VCPMI, which I'm using to trade live. For those that are just joining me here, this is a live trading room that I use to trade my account to teach and coach traders in all levels that are interested in a very highly technical matrix or indicator, you might say, that essentially is trading the reversion to the mean principle. It is essentially a contrarian indicator that identifies the extreme levels of speculation. and we use standard deviation to identify those levels. And once we extrapolate those pivot points, then we essentially ignite the pivot points mathematically to give us high probability signals. So if we go back into the market here, Bitcoin is approaching the sell to level that we have on a daily basis of 43,500. The high was 43,535, and it pretty much has met the criteria for the sell to level daily. Now, the momentum driven indicator is identifying the levels of resistance up here, and that we can potentially see a little bit of selling here. So if you're long on Bitcoin or in some of the derivatives that you have deep profits, let's say, that you built, this might be a time for you to consider to unloading some of those profits in the futures contracts while you continue to hold on to digital assets that are related to Bitcoin. But we recommended to take some profits up here to our traders in our trading room. And so we've liquidated, taken some profits. We're holding on to our derivatives, and we're going to wait for another entry point that would be appropriate for the kind of risk that we want to manage in this instrument. So we've completed the targets here. And let's watch the market here for a little bit and see how it trades in this area. I am updating the weekly numbers here, which have been just updated for the remainder of the week. And these are going to be the targets, the weekly targets that we're looking at, which indicate the, I have the weekly and the daily chart here. What I want to look at is the the monthly numbers that we're looking at. For Bitcoin for the month of February. And what you can see here is the market has gone up above the standard deviation of 39,643, which is a 50-50 standard deviation. And what I'm finding is that Bitcoin adheres pretty well to linear regression, or trading basically the reversion to the mean principle, which is essentially extrapolating the extreme levels above and below that standard deviation. And for the month of February, the extreme level above the mean, which indicates to be the first target or the sell one target, is 46,417 for the rest of the month. The second level is 54,448. Now, extrapolating this pivot points to a probability model, you're looking at the standard deviation about 50-50%. The sell one level is a 50-90% standard deviation. The sell two level is a 50-95% standard deviation. What does that mean? Well, that means that mathematically above 46,000 and 54,000, it's resistance. It is the area where you could see some supply come into the market, but it doesn't mean that it has to stop there. What will determine the momentum is basically the supply and demand volume that we will see here, that whether it's going to be strong enough to take out all the supply indicated here and close above the sell to level, which would be a breakout point. Closing above 54,000 would be a breakout on a monthly level, and then we can, extrapolate once again what would be that structure, based on these numbers that would be updated. So the market will tell us, and so far it looks like we still have some more room to go on the upside, but we have accomplished a nice profit on the daily numbers. In particular, we have met the weekly target of 42,378, and so far this level now harmonically is showing us that there is a level of support in here now, that this resistance has been broken, and the targets above, which indicate 43,500, which was pretty much completed. The weekly is all the way up to 44,000 so far for the rest of the week. So we've seen a phenomenal move here in Bitcoin in just the last few days, so it's bound to enter in overbought, condition, and we want to watch it very carefully and protect our profits. Let's take a look at gold here. The daily number, the market got up to 18, 18, 20, 18, 18, 19, 18, 19 was basically the target on the daily for gold. And we have seen a little bit of a reversion now unfold, 1820 was the high, 1819 was the sell one level. That was pretty close enough to give you room for you to lock in some profits if you were coming in long or hedge. Or in terms of day trading, the market got up to very close to the sell one level of 1819, and it did not penetrate that level. But if you're, managing risk, it's fair to say that it satisfied the pattern enough that if you wanted to take the risk, you could have gone short, taken profits, and put your stop above 1819. It would give you enough room right away to lock in a profit as we made the low of 1812. Silver, we got up to 2309 on the first, and it completed that weekly pattern. Let me go back here to the gold market, and I want to take a look at the monthly. At the monthly numbers here for the rest of the month, and we're looking at the market trading above the standard deviation or the mean of 1812. So it's activated a bullish price momentum with a defined target of 1843. On silver, the market, the monthly mean or average is 2306, and coming down below that, it activated this bearish price momentum. There were no signals. It just that it identified the momentum of the market and found support at 2198 and reverted right back up again. So the monthly is still in a bearish mode unless it closes about 2306, which more than likely it's going to. The weekly average is 23 coming into this week, and the market completed the first target of 2277 daily, and we're looking at 23 also on the daily sell 2 level, which would harmonically align with the weekly pivot point. So I think we're going to be testing 23 to 2303 once again, at which point you can lock in some additional profits or synthesize your profits by using derivatives. On the geopolitical front, there is a pending threat of Russia invading Ukraine anytime. And we need to pay attention to this, as it could disrupt the markets over the short term. I think the major factor that is weighing in the market here is this Russia situation. But my fear is that China, very quietly behind the scenes, could be setting up a stage once again to put the world, the Western world, under pressure geopolitically by threatening to invade Taiwan. So we have a real dynamic here, a dual dynamic geopolitically that needs to be defined, and I think it's bringing in the fear of risk in the market. It seems that fear has become the common denominator in all of this. The fear of interest rates going up, the fear of the market collapsing, the fear of Russia invading Ukraine, the fear of China invading Taiwan, the fear of the virus, the fear of the vaccines. I think we capitulated with fear, my friends, and you got to take a look at the reality of what the markets are saying, and it's not what it's in the headlines. Just listen to Bitcoin. Listen to gold and silver, what they want to tell you. And that is essentially that the economy is not as great as they say. The numbers are being manipulated. And I think we're beginning to build what could potentially be an explosive move in commodities, an explosive move as we already are seeing in grains as a consequence of this potential conflict with Russia, cutting all exports in grains, shifting a lot of the demand to the U.S. and affecting the U.S. world grain situation drastically by prices increasing, as we are beginning to see in food prices. If we take a look at soybeans, the leading indicator, 1586 is the new high, and it seems that we're going to challenge the highs that we made on May of 2021. And crude oil is trading above $90 a barrel with a target of $100. This is not positive for the economy. 93.17 was the high. And this is the reality. And I do not believe that energy prices are going to go down anytime soon. I don't believe that food prices are going to go down anytime soon. And I think we're beginning to see the possibility that this inflation is going to be a little more than temporary. Have a great trading day, my friends here. Be safe. Be on the alert. I'll talk to you next time.